Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Yellow Cake Plc. Before I introduce our speaker, please note you can submit your questions for the presenter in the question box to the left of the slides. Additionally, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Andre Liebenberg, Chief Executive Officer of Yellow Cake Plc, which trades on the OTCQX Best Market under the symbol YLLXF and on the AIM market under the symbol YCA. Welcome, Andre.
Thanks very much, Matt, and welcome to the audience, and thank you very much for your time today. Let me start just briefly by talking about Yellow Cake, and then I want to talk about the uranium sector more broadly. Yellow Cake, as Matt mentioned, we trade on the OTC. We're a London-listed company. We are set up to give investors exposure to the uranium commodity. So the only assets we have are physical barrels of uranium. We don't have any mining operations, any processing plants. We don't undertake exploration or development. A key feature of our company is that we have a long-term arrangement with Kazatomprom, which is the world's largest and lowest cost producer of uranium. This arrangement allows us to buy up to $100 million of uranium per annum, essentially at the spot price and at our option. This is a 10-year framework arrangement that we entered into at the time of our IPO in July 2018, and it runs through to 2027. The uranium that we own are stored in physical locations in Canada and in France. And the corporate structure is such that we've outsourced a lot of our activities like the accounting, IT, and some of the transactional activities around uranium, so that we have a leaner structure as possible. We only have 2 full-time employees, myself and a CFO. We don't have an office. We both work from home, and we try and maintain our annual operating costs at below 1% of net asset value. And currently, we are running quite significantly below that because the company has grown. Just quickly looking at our balance sheet, as I mentioned, Yellow Cake is a very, very simple structure. We own almost 19 million pounds of uranium, and we have around $13 million of cash. We don't have any debt. We haven't undertaken any hedging structures. So all the uranium that we purchase, we have equity financed. And if you look at our net asset value per share, it's currently around £4.74, which is a little bit ahead of where our share price is today. Just quickly, a corporate summary. As mentioned previously, we trade on the AIM market of London. We have a very diverse investor base. We have commodity specialists, we have generalists, and we have a very big retail following. At the time of the IPO, we didn't do a retail offering, but that retail following has built up significantly such that today we have over 30% retail investors. And I guess largely because of the retail investors, we have a very liquid stock. We trade around 1 million shares a day. So at a £4.30, £4.40 share price, it's approaching $5 million of volume per day. We are covered by 3 research houses: Bank of America, Berenberg, Cantor Fitzgerald, and Canaccord. And our primary brokers are Canaccord and Berenberg here in the UK. So that's a quick snapshot summary of Yellow Cake, the company. And as I mentioned, really we provide investors with a pure way of investing in the underlying uranium commodity, which is very difficult to do if you had to try and do it yourself. The uranium story is becoming increasingly compelling. I think uranium and nuclear is being recognized as a stable, baseload, high capacity factor, carbon-free source of energy. And more countries are adopting carbon-free goals. I think there's something like 76 countries that have announced carbon zero targets, be they 2040, 2050, or 2060. The high costs of building energy infrastructure has meant that existing nuclear facilities are increasingly being valued and are getting life extensions. In the US, we've seen facilities that had 40-year lives being extended to 60 years and now even 80 years and possibly beyond. In Japan, they're looking to extend the lives of their reactors, and elsewhere around the world, we are seeing the same trend. And then I think the key factor, which I will address in the following slides, is that, we had a very good build-up over the last few years for the nuclear industry. But the events that happened in the Ukraine earlier this year really changed, the nuclear industry quite fundamentally. And we are seeing Western countries and companies pivoting away from dependence on Russian fuels. And this has a big impact for the nuclear industry. The demand picture is changing positively. When we IPO'd, demand forecasts were for around demand growth of about 1.5% per annum. And I think forecasts now are sort of 3 to 3.5% per annum demand. And why is that happening? The adoption of carbon neutral goals, the life extension of existing facilities, and then the very strong demand growth, which is happening in the Asia Pacific region. So in the EU, after a very lengthy debate, we had the green taxonomy adopted, which will come into effect in January of next year. Germany recently made the decision to extend the lives of their three remaining reactors. In the UK, we've seen strong support for existing and new facilities. South Korea, with the change in leadership there, we saw a U-turn on nuclear. The previous leadership wanted to exit and phase out nuclear. The new leadership has changed its position fundamentally on the nuclear issue. In Japan, they recently announced that they would restart 7 reactors over and above the 10 that have already been licensed to run, and those will be restarted by the summer of next year. In the US, the Inflation Reduction Act has had a major impact for the nuclear industry. If you total up the available funding through debt and support, it could easily reach $15 billion. It's a very, very material positive for the nuclear industry in the US. And recently in California, Diablo Canyon was given a life extension of 5 years. That reactor was due to shut in 2025. I mentioned the Russian invasion of Ukraine a little earlier, and I just want to talk through the significant impacts that has had on the nuclear fuel industry. Russian fuel has been delivered into the EU since 1975 and the US since 1980. Today, about 20% of the enriched fuel coming into the US comes from Russia, and in Europe, it's above 30%. So Russia is a significant supplier of enriched fuels into Europe and the US. We have seen political and economic sanctions imposed on Russia and Russian players, but to date, nuclear has been explicitly excluded from those sanctions, and probably for the reasons I've just mentioned. But what we are seeing is that utilities and customers are self-sanctioning. For ESG and other reasons, they are looking to migrate away from Russian supplies and seeking other Western options. Unfortunately, there are major constraints in the fuel cycle on conversion and enrichment, which again I will cover in the next couple of slides. But we've seen a major focus by utilities to try and secure Western sources of conversion and enrichment. Now, conversion and enrichment are industrial processes. That capacity can be expanded, but it'll take time. It'll probably take up to 5 years to expand conversion and enrichment capacity. And to do that, the players in that industry will want long-term contracts at prices that are above where prices are today in order to induce them to build that capacity. Just quickly on the Russian influence in the nuclear cycle. If you look at the front end of the fuel cycle, what comes out of the mining process is uranium oxide, which is the inventory that we hold. That uranium oxide gets converted into a gas, UF6, and then gets enriched through a centrifuge process, and then gets converted back into a metal, into fuel rods and fuel bundles. In the conversion space, you can see the significant position that Russia has. And if you look at enrichment, Russia is around 45% of global enrichment capacity. So the big issue for Western utilities, be they in Europe or the US, is where to source conversion and enrichment capacity, which will take time to build. And what happened post the Russian invasion of Ukraine is we saw a significant jump in both conversion and enrichment prices. And the enrichers are talking about needing something like $150 SWU to build new capacity. Well, we are starting to see prices trade at those sorts of levels. And equally on conversion, we've seen a significant jump in conversion prices. A big feature of the uranium industry is that the utilities, the power entities, contract for most of the material via long-term contracts. So around 85% of the fuel that utilities burn is contracted under long-term contracts, which would be 5 years plus. Utilities only buy about 15% of their fuel in the spot market, and they really use this to top up inventories and for refueling. Now, the fuel cycle is a long cycle. So to go from mined uranium, the oxide, all the way to fuel bundles can be as long as 2 years. So when utilities are looking ahead and seeking fuel, say in 2024, 2025, they really need to be contracting for that material today and next year. Now, historically, if one looks at the past 10 years or so, and post-Fukushima, when demand really fell away, utilities contracting subsided significantly. And during the 2013 to 2021 period, we've seen on average around 73 million pounds of uranium put under term contract against an annual fuel burn of around 175 million pounds. So utilities really worked down their inventories, but also had access to secondary supplies. What we have seen earlier this year is a real return to the contracting market by utilities. That paused after the Russian invasion, where the utilities then looked at conversion and enrichment. But now we are seeing a big jump back into term contracting by utilities. And year to date, we've had 107 million pounds put under contract versus the 59, 60 million pounds equivalent of last year, and against the 73 million pound average that we've seen in the past. Also, what we've started to see is that utilities are now starting to contract with junior mining companies that have projects. So for the first time, utilities are sort of signaling that the industry will need new supply, and we're seeing contracts being written on projects that will deliver into the future. Now, I said that the utilities have started contracting significantly again, but they are still very undercontracted, particularly towards the middle and end of this decade. So if you look out at 2028, 2029, 2030, the utilities are significantly undercontracted to where their needs are. And that's the activity that we are starting to see now. I talked about the demand side and the demand growth forecasts, but the uranium industry, I think, the big issue is the supply side. If one thinks about copper, one would look at China and demand and take a view on where the copper price would go. In uranium, I think the issue is supply. 75% of the world's supply comes from 4 countries, and that is Kazakhstan, Namibia, Australia, and Canada. And, very, very few mines make up total production. Since Fukushima, we have seen very little investment into exploration and into the development of new facilities. When we IPO'd in 2018, there were a number of projects that were on the slate at that time. Today, those projects are still on the slate, and we've seen very little progress in those projects moving forward. And that capacity will be needed. It takes, it could take up to 10 years to go from exploration to an operating mine. So, I think the real difficulty in this industry is going to be bringing on enough supply to meet the demand that is emerging. And if I put that supply and demand picture together, you can see from this chart that towards the back end, mid to back end of this decade, demand is going to significantly outstrip supply. And the green bars show probable projects, and those projects are all needed in order to meet demand. And we know that in the mining industry has a very poor track record of bringing projects on budget and on time. So I think that in future, we could see a supply crunch if these projects don't come on time and on budget to meet the rising demand. Okay, so just in conclusion, we believe that the nuclear story is becoming much more compelling, principally because of the green ambitions. And we're right now in the middle of COP27, where countries and companies are restating their green ambitions and green purposes. But I also think that basically since the Russian invasion of the Ukraine in February of this year, energy security and energy availability has become a major theme. And against this backdrop, Yellow Cake has been set up to provide a way of playing the uranium commodity price in a very clean way. We have a low-cost structure. We have exposure just to the physical uranium without operating risks. And we have a liquid investment in the sense that we have a good daily trading volumes, as I mentioned earlier, of around 1 million shares a day. And there's some days that we've seen up to 5 or 7 million shares traded. So with that, I want to thank you. I'll pause and then we can go to the questions. I'm just going to go through. Okay, just looking at the first question, which is what is the IPO price and when did it list? So we listed in July of 2018. We raised $200 million, of which we used $170 million to buy our first tranche of uranium. The shares were listed at £2 in 2018, and currently the shares are trading around £4.30, £4.40. Just looking at the next question, can I speak about supply contracts, length and price? Now, we don't have any supply contracts in the sense that we buy and hold uranium. We don't sell uranium. But on the offtake side, we have this contract with Kazatomprom, which I mentioned earlier. It's a 10-year framework agreement contract from 2018 to 2027. It allows us to buy up to $100 million of uranium, essentially at the spot price. It's an annual option. It's a 1 January to 31 December option, completely at our option. We can do all of it or none of it, or in multiple tranches. And the key decision point for us around exercising that option is when and if we trade at a premium to net asset value. The only value that I can add for investors is to issue equity at a premium to net asset value and buy uranium. And what we have done in the past is when we traded a significant discount to net asset value, we have bought back our own shares. And because we're not an operating company, we don't generate income, we're only able to do that when we have some surplus cash. So we have done that in the past. Just going on to the next question. Again, a question around our customers. As I mentioned, we don't have customers, but it's an interesting question because when we set Yellow Cake up and IPO'd, we took the view that uranium was a commodity. Commodities are cyclical, and our view was that at the time, the uranium commodity was at the bottom of the cycle. At the time of Fukushima, the uranium price was $70 a pound. That had dropped all the way down to $17, $18 a pound in late 2016. When we bought our first uranium, it was at $20, $21 a pound. So, being a commodity, at some point in time, uranium is going to trade at the top of the cycle. So what happens then to Yellow Cake? I think we've said that we do not want to sell our uranium. What could happen is if a supply crunch does emerge, which is not beyond possibility, and someone needs that fuel, they could bid for the company, offer the shareholders an attractive enough a premium, and buy the company. At some point in time, we'll have to see what happens. Let me just get to the next question. Would a nuclear accident in the Ukraine cause a similar negative reaction against nuclear as Fukushima did? I think, the big risk out there, the black swan risk for the nuclear industry is another event. If we have another Fukushima type event, then I think that would be a big negative. Now, the modern reactors are much, much safer. And I think that risk is significantly, or has been significantly lowered. The issues that really have emerged around the Ukraine, it's not so much the risk of a direct missile strike, because the containment cells that they have are very strong. But the issue more is losing power and being able or being unable to manage the fission process. So I think that there always is, a negative issue in the uranium sector would be negative for the industry. But again, I think that is a very low risk. Then I have another question around our revenue business model. How do we make money? Well, we don't really make money. We're a sort of a capital appreciation stock. And I guess, in some sense, we're like an ETF. We hold physical uranium, and investors buy us because they think the uranium price is going to go up. When we bought our first uranium, we paid $21 for that. Today, the uranium price is trading just under $50. So, in part, we've got that thesis right. But there are some revenue opportunities. We have in the past done location swaps. We have storage facilities or storage contracts at two facilities, one in Canada, one in France. There was a period during the first wave of COVID where we saw the prices for storage or for uranium at the Cameco facility in Canada trade significantly above the storage in France. So we swapped 500,000 pounds of uranium in Canada for 500,000 pounds in France, and we earned $2 a pound on that swap. So that was $1 million that we were able to earn. But those opportunities don't come along all the time. Sometimes there are premiums that are apparent or available in one location over another. Because we hold for the long term, it doesn't really matter where we hold our uranium, so we will take up those opportunities. The other revenue opportunities are royalties, streaming, but again, in the uranium industry, those are difficult to find, difficult to obtain. There is a royalty company out there, Uranium Royalty Corporation. That is their business model. So, if the opportunities arise, we will look at them. I'm not keen to support the development of new mines because supply discipline is something that suits our business model. But if there are midlife royalties or streams that give us access to physical uranium, we will look at that and take up those opportunities. Let me just look through the questions. I don't see any more questions. So Matt, I think that's probably a good time for us to wrap up. Just like to thank you again and thank the audience for attending the presentation.